So yeah, the reason why people can't catch moves like this in the market, um, is simple. One, they don't have a trading plan, and two, they're afraid. And because you don't have a trading plan, that brings fear because you don't know what you're doing in the markets. We catching pips tonight. Oh yeah, we are. Yes, sir. You already know Dwayne. See, Dwayne is one of my personal still damn, it's still dropping. Is news still happening or something? Oh snap! What is going on? Y'all see that? I wonder why it's still doing it. It might be news going on right now. But yeah, Dwayne's one of my guys who I've been mentoring for a minute, and he too was once in you all's shoes as well. You know, your first time being on my call, hearing about harmonics and whatnot. But yeah, Dwayne, you can kind of let him know what was up, and you know when you first got started trading, um, to where you know where you are right now. But I'm looking at, well, I'm keeping my eye on this right now. Also, I don't want to sound like I am all over the place right now because I'm, you know, also trading at the same time. But I'm looking at, I'm looking to see if price is going to push down to this white line right here. This white trend line is based off my daily time frame, and if it pushes down there, I think I'm gonna jump in for a quick sell. I mean, a quick buy opportunity. The price pushes down there and give me an opportunity to enter for a buy. So I want to show you guys, you know, how I was able to catch this move right here. Again, it's very, very simple. When I first got started trading, I trade, you know, only a specific pattern in the market. There are so many different harmonic patterns out there, but at the end of the day, if you aren't, you know, focused, you know, you're, you know, on like a specific strategy like harmonics, and it's pushing down there. Hold on. As soon as it touches, I'm entering for a buy. So yeah, most people, so like I was saying, is that a lot of people, you know, they're all over the place when it comes to trading. And one of the reasons why I became, you know, pretty good at trading is because I stuck to one thing, and what I was doing was actually working. So you know, you got to understand that if you do have a strategic plan, it has to work. You can't be doing the same thing over and over again. It's not working. So I found harmonics. Harmonics worked for me. I only stuck to one specific harmonic pattern for a year straight, traded that, mastered it, and then I moved on and started adding the different harmonic patterns to my portfolios. Um, I get asked this question a lot. Do I use the harmonic scanner when I trade? No, I don't use a harmonic scanner when I trade. I strictly use you know, naked charts like you guys see right now, and that's how I'm able to understand harmonic patterns and catch these different movements in the market, like you see right now on my chart. So I want to be able to get, you know, some of you on this call right now to that level where you can be able to mark up your chart with confidence. Dwayne, he is on his call right now. He's one of the, I think he might be the only one on this call that can actually, you know, mark up a chart without having that fear and be confident entering the market as well. So with that being said, this pattern right here happens all the time in the market. Harmonic patterns happen all the time in the markets. And I'm gonna show you guys real quick. I actually should drop this chart. XAU, USD, XAU, XAU, USD. I actually dropped this chart right here in the group chat. I'm not sure if anybody's seen it, but this right here, harmonics happen all the time. You can see right here, the harmonic pattern in purple. This is one that I, you know, pretty much hold, you know, focus on the most. and it's called the cypher pattern. This is not on the scanner, so definitely, it's something that you will have to learn directly from myself. But this pattern right here is one that, I've been trading for a full year straight. I mastered it, became great at it, made me a lot of money, and I started adding other patterns like this Gartley pattern that you see right here in white right next to it. So you kind of see how if I were to take this off my charts, if I want to remove everything, no, I don't. Let me just do this. So if I was to take this off of my charts, you would not be able to see what I see in the markets, okay? Like, you'll be lost all over the place. You think the market is dropping, you ended up selling it, caught up in the market right here, and then boom, it reverse against you. You think it's about to be a double top right here or whatever. You ended up selling it, holding it, whatever, for whatever reason, and boom, it pulls up against you. You know, for one, the reason why a lot of people, get caught up in moves like that, double tops and stuff like that is because they basically what used to happen to me, I used to, try to catch double tops and stuff in the market, but I never could be successful at it because how do you know what a double top actually is? So, looking at this market right here, price pushed down, and me being the type of person I never had goals in the market, so I would be all over the place when I'm trading. And then I end up holding this trade, turning the winning trade into a loser trade because the market pulled back against me, not knowing I'm actually caught in the middle of a harmonic pattern. Okay. And then, price comes up here, boom. I'm thinking, it's breaking this level right here. I'm going to buy it. Price pushes up. Okay, cool. Consolidate. And then boom, drops against me. And I'm pretty much getting whipsawed in the markets. So I actually came across harmonic patterns. And like I said, without me actually drawing this out on a chart, then, you probably wouldn't even be able to recognize these different movements. Okay. And like I said, these patterns happen back to back, just like this. So that's the cool thing about trading harmonics. Now, trading harmonic patterns is going to give you guys some type of consistency when you're also trading in the markets. Let's see. Why did I not start from the higher swing? You mean like way up here? Because my harmonic started right here. This actually would have been a harmonic pattern right here. Matter of fact, I lied. It was a harmonic pattern. Crap. Let me measure this out real quick and see. Yep, this was a harmonic. So this is 3 harmonic patterns that happened back to back. Let me check on Euro NZD real quick. Euro NZD, and I'm gonna get back to this real quick. Like I said, I'm actually trading live right now, so I'm gonna be back and forth. It didn't give me that touch that I wanted right there. That would have been nice. Price push down there, boom, would have shot up. That would have been technically. Let me see. That would have been an easy 50 pip gain right there. But I'm not gonna worry about this right now. I caught this move. I'm not even gonna be greedy. So I definitely got practice discipline XAU USD. So let's go back to this trade over here. So looking at this trade, where is it? Here we go. So yeah. This was actually 3 patterns that happened back to back. And that all happened, I think it happened this week. Well, starting from the 6th. Well, let me see. because I would have sold it right here. So from the 8th all the way up until now, February 8th up until now, these moves happen back to back. So I'm gonna get to your questions real quick in a minute. Let me answer his question why I don't take it from the top. So yeah, I actually did take it from the top because there is another harmonic pattern right here. So based off of these different movements, like I told you guys, all harmonic patterns are gonna start with a period of consolidation, like you see right here. Boom, the market made up its mind and decided to drop. Almost always you'll get this right here, okay? Sometimes you won't. Sometimes the market will just drop and then boom, reverse, like you see right here. Okay, so this is my period of consolidation. You can start turning your eye to see that. Wait for the market to make up its mind. Boom, give you that level of support. Okay, so this right here will be my level of resistance up here. Follow all the way down to my level of support. Just simple stuff like support and resistance, like you guys definitely should learn. And I'm gonna show you guys how to mark up your chart as well, so you can start understanding key levels of support and resistance, and really help you guys take it to our next level with that. So I take my fib, then I take my fib from that level of resistance right here all the way down to this level of support. And my job is just to wait for the market to pull back. I see price then pull back, and based off of these different levels right here for Fibonacci. Now, mind you guys, none of this stuff to my right even happened. All right, so I'm not even focused on whatever happened to the right. I'm not even focused on all of this stuff over here, okay? None of this I'm focused on right now. I'm just focused on this point and this point. And I want to see where the market pulls back. So the market then pulled back and gave me that 61.8 touch right here, based off of my X A move. Now I'm looking to see, follow the market, follow it, boom. Right here, price hit the 61.8, which is a valid Gartley harmonic pattern, okay? Now, let me zoom in some and kind of break this down to you, because I know a couple of people actually sent me a photo today on Instagram asking for like ratios of like harmonic patterns and whatnot. But when I trade, I only use specific ratios, okay? Like for the Gartley pattern, it has to hit a 61.8 for the B leg. And then for the C leg, it also has to hit a 61.8 level. Now, the internet says, and other traders, they claim that the 38.2 for the C leg minimum is required. Like I say, it's what they want to do is perfectly fine, but it gives me less exposure to the market. Okay, I want to try to give myself the least amount of exposure possible. Okay, so I'm taking this level of support right here. I'm sorry, that level of resistance right here, and this level of support down here to identify this level right here. Okay, that's what I'm doing. I'm trying to figure out what that level is, and like I told you guys, I took my fib from my X leg all the way down to my A leg, and we can see that we got that 61.8 touch. You can see we got a 61.8 touch. Well, you can't see it because my candle's in the way, so let me just extend that out right there. Boom. All right, cool. You can see we got that 61.8 touch right there, and based off of this touch right here, this is my B leg now. Okay, so we got X, we have A, we have B. Okay, following the market from that point, what we are looking for now is our C point. Our C point, like I say, most people, and you guys probably see on the internet too, they say the 38.2 minimum is required for the Gartley pattern. Not I. I don't do that. I don't trade that way. I got my own little style, my own ratios. I need price to hit a 61.8 minimum, okay? We have that 61.8 touch right here for my C leg, okay? This is my C leg, okay? That 61.8 touch right there. Now, because we have that 61.8 touch, we now have a valid Gartley pattern. So what I want to do now is start setting up my trade for me to go ahead on and enter for a sell opportunity now that we have that identified. So I have my X identified, I have my A identified, my B point and my C point all identified. Now what I want to do is take my fib, taking it from my X leg all the way down to my A leg. Let me just extend that all the way out, all the way down to my A leg. And what I'm doing is I'm looking for a zone in the market, okay? Let me delete this little box right here. I'm looking for a zone in the market. My zone is going to be the 61 point, I'm sorry. It's going to be the 78.6, which is this red line right here. And I want to take my Fibonacci extension tool, okay? I want to take my Fibonacci extension from X to A. I'm sorry, from A to B, all the way back down to A. And I'm looking for a 1272 level. So I'm going to put a trend line right here on that 1272 level. Okay, and let me actually line it up correctly. I like to be precise and get surgical on my charts. Just like a doctor when he's you know, opening up a patient, they have to use that precise incisions or whatever they call it. Same as that thing with trading, no different. Take pride in your work and make sure everything lined up accordingly. So now what I have right here is a zone. Okay, I have a zone based off of that 78.6 and that 1272, which is up here. Normally I like to take the full extension of that move, which is the 1272. I normally don't enter at the 78.6, but it's all based off of this zone right here. So let's see how wide this zone is, how many pips it is. It's only 16. It's only a 16 pip zone, so I would probably go ahead and enter at that 78.6. If that zone was a little bit bigger, that gap was a little bit bigger, like 45, 50 plus pips, then I would be a little bit more cautious and enter at the extreme of that pattern, which is the 1272 leg. So now we have our D completion. Okay, so let me go ahead and erase everything real quick and draw this harmonic out. Now we have our D completion. So we have X. We have X to A to B, B to C, C to D. All right, so that's one harmonic pattern right there. Let's see. I'm amazed to watch it recording twice. I got how to mark up harmonic. Thanks a lot. Plus, I need your help setting the fib extension tool. Not sure if I have the right settings on mine. Stop loss used for the cypher. I use the X to A leg. I'm sorry, yeah, X to A, and it's the 1.13 level. For that, I'll show you in a minute. Fibs are measurement, nothing special. The fibs are measuring, nothing special. If you learn how to measure X, A, B, C, D, then you're good. So yeah, I'm going to go ahead on and I'm going to go ahead and so this is the one harmonic pattern right here. Okay, so sometimes when you're trading, okay, you kind of get in your zone, right? Just like an athlete, when you're out there on the court. When I was out there on the basketball court, I would find my rhythm, I'll be in my zone, and sometimes I feel like I can't miss shots, right? So same thing with trading. Once you get into your zone with trading, it can get ridiculous out there. So thing about James Harden right now for the Houston Rockets, he went right now. He's like 30 for 30. He had 30. He has right now. He's on a streak right now with a 30-point game over the last 30 games. Crazy, right? He can't be stopped right now. It's like the flow and everything is just going like hand in hand right now. So it's kind of like the same thing with trading. So I'm going to go ahead and delete this harmonic pattern right here. And I'm going to show you the other one. Have you got any tips on not to get stopped out by your stop loss? Yeah, I'll show you that in a minute. So now looking at this, my next setup, what we have is our anchor leg here at the bottom. We have our B leg here, right? We have our A leg right here. Let me delete all of this real quick. Oh, and also if you look back to the left also, look at all this structure right here in the left with this zone that I had highlighted, and look where this harmonic pushed right up into. It pushed right up into that zone. Supply, demand, simple. So now looking at this harmonic that we have here, this would be my anchor leg down here at the bottom. And what we have is, just simple, just following the market, basically waiting for the market to, but you like take what the defense give you, okay? Like that's what my coach would always tell me, if they're gonna force you left, go left and make them pay. If they're gonna force you right, go right and make them pay. If they're gonna give you a jump shot, shoot it. Take what the defense give you, okay? So you're pretty much taking what the market gives you. You have to wait for it to develop, set up and develop, okay? So this is my X leg right here for this harmonic pattern, and this is my A leg, okay? So the last pattern that I went over was a Gartley pattern. And this pattern right here is the cypher. Okay, this right here is not on the harmonic scanner. If you want to learn, I'm the only person that's teaching this move right here. So if you guys want to learn, definitely go back and watch my recordings, and you guys should be able to understand how I trade this and why I'm so accurate with it. So I have my X leg following the market up to this level of resistance right here. Again, everything starting with support, okay, and my resistance. Support and resistance, okay? So I have my X leg following the market. I have my A leg. And what I want to do is take my fib and measure out that X to A leg. Now, for this to be a valid cipher pattern, okay, I have to have price come down to a 618 without closing below the 61.8. Without price closing below the 61.8, and we can see that it did not close below the 61.8. So that's my B leg. Had price closed below the 61.8 level right here, that would have made this pattern invalid, okay? So you have to be strict with your rules and be almost robotic when you're trading, okay? So what I want to do now is go ahead on and follow the market from where I currently am at my B leg. And like with these moves, it's like you already know, once you have a couple of levels that are aligned, it's like you already know exactly where to go. It's like you don't need, like you can predict which way the market is going to go from that point, or what you should at least expect, okay? So just like me playing basketball, my coach draws up the play, and I'm the point guard. Guess what? I know exactly where everybody on that court should be before it even happens. So you have to kind of see it before it actually happens. So now what I want to do is go ahead and take my Fibonacci extension tool from my X leg to my A leg, all the way back down to my X. Let me get my crosshair so it can be a little bit more, so I can line everything up. XAX. Let me just do this. And for this to be a valid cipher pattern, it has to hit a minimum of a 1272, okay? If price doesn't hit that 1272, then it's not valid. And price can't close above that 1414. So you can see how price did not close above that 1414 level. It held. So again, we have a valid pattern. And if you want to, go back and watch the recording, I want to drop it in my on YouTube, on IML TV. You go back and watch it. We have our C leg. Now I already know where the market is going to complete based off of the evidence that I have collected over the past couple of years. Okay, just trading this harmonic pattern. I know that it's going to complete at the 78.6. So from my X, taking my fib from X all the way to C, my entry point is at that 78.6 level. Okay. My entry point is here at the 78.6 level. When price was right here, when price was sitting right here, I already had my pending order for a buy sitting right here. Okay. Now, price proceeded to go down and hit the 88.6, which is fine. 95% of your trades that you're going to be in, you're going to experience drawdown, so get used to it. You trade harmonic patterns, then it might, it might decrease your numbers on that. You might experience less drawdown. But this is what we have here, the cipher pattern. So from X to A to B, B to C, C to D is my cipher pattern. Okay. So that's another pattern right there. So you can see how I had this pattern right here, my Gartley pattern. X to A to B, B to C, C to D. My Gartley pattern. You can see, let me change that color to turn it to blue. So you can see how this Gartley pattern, my entry was the same as my C leg, okay? For my harmonic pattern, for the cipher pattern that you see in white. The completion of this move is the C leg for the to push down into the D leg for me to buy this market. So technically I could have rolled this all the way down and caught that entire move to the downside based off of this second harmonic pattern that developed. And this right here comes with having confidence, though. You can't just come to your charts and just start, doing that type of stuff. You definitely got to have confidence and train your eye to see these type of movements right here. So from there, all the way down here, that's a 100 pip move right there. Easy 100 pip move to the downside. Now, let's look at the last pattern. Again, the market starts with what? Period of consolidation. Boom. That's my period of consolidation right there. And look what happens. The market dropped, giving me a new leg. So my anchor leg up here, my level of resistance, starts with my X leg. And market pushed all the way down, giving me a level of support for my A leg. Okay. Again, period of consolidation, the market dropped. I have my X leg for my start point, my A leg for my finishing point from that point, that part. So this right here to the downside is basically an impulse leg where the market consolidated and then boom, just a burst of price action just came out of nowhere. So this will be considered an impulse leg right here. So with that being said, I'm going to go ahead and take my fib from that level of resistance all the way down to this level of support. I think I took it from up here, if I'm not mistaken. From that level of support, from this level of resistance up here, all the way down to this level of support. Like I told you guys, my Fibonacci tool, my fib levels, 38.2 to 50%, 61.8. They all tell a story. Price came up, hit that 50% retracement. I know I should be looking for a specific harmonic pattern. I should be looking for a potential back pattern, okay? Based off of that. Based off of that XA move. So this is now my B leg. Let me go ahead and draw that back out. X, A, B. Okay. So now what I want to do is identify my C point. So what I want to do to identify my C leg, simply take my fib from A all the way to B, and I'm looking for a price to give me a 50% touch. And that's exactly what happened right here. Price came here and gave me that 50% touch. Now I have a valid B leg. I'm sorry, I have a valid C leg. So because I have that identified, I know exactly where I should be looking for a potential sell opportunity. I'm going to take my fib, looking for my entry point now. Now that I have XABC identified, the D point is my entry point. I'm looking for a entry now. My entry point. Once I identify XABC, my entry point is the 88.6 for me to get into a sell opportunity. And look what happened. Price came right up here, hit that 88.6 and dropped. So technically, with 3 trades, I experienced probably 20 pip drawdown on 3 trades. That's 18 pips right there, plus whatever this little drawdown is right here. And you can see how price came up here, hit my order, then dropped. So from X to A, B, C, D. Guys, this is how I'm catching these moves in the market. Every single, I don't want to say every day, but whenever they present themselves, this is how I'm able to catch these moves in the markets. We have 3 different harmonic patterns right here. Now, we could be looking at a potential another potential harmonic pattern as well. It might be a smaller one, but we could be looking at a potential Gartley pattern if price pushes up into the zone up here. And like this is still a zone, XAB. See, complete at the 78.6 right there. We're gonna be looking at another potential smaller pattern that could potentially push down into a much larger pattern. But I'm not gonna worry about this small pattern right now. But this is how I'm able to catch these moves in the market every single time. If this doesn't make sense to you guys, does this not make sense to anybody? It's making great sense. Yeah, to you, of course. Yeah, it's definitely gonna make sense to you, bro. Have you got any tips on not to get stopped out? How does the wicks and bodies come into account? Everything with trading harmonics is wick to wick. If this does not make sense to you, then that means you need to get on my sessions a little bit more and stop BSing and really take this serious. So for the stop loss, it's let's take this red harmonic pattern right here. All my stop losses are from X to A. I take my fib from X all the way down to A. And my stop loss is normally that 113, this 1.13 level right here. But when my basketball coach says do one thing and the defense is doing something completely different, I can't do what he's saying. I have to do what's best in that situation. This is the textbook stop loss, okay? I like to hide my stop loss somewhere in this area, either above or below or above the 1272 level. That's where I like to keep my stop loss. And based off of the risk to reward, if this right here is sometimes my stop loss could be 100 pips, but I'm not saying that I want to use my stop loss every time though. You feel me? Like I rarely use my stop loss. Like I can place it, but that doesn't mean that price is going to push up into that area and hit it for the most part, because I know the rules based on trading harmonic patterns. I keep a mental stop loss. That's how I do it. But you have to be disciplined to be able to do that. Some trades I see price come up, smack that 113 level, and then boom, drop. I'll show you one right now. Thank you, Ray. Been looking for my path for 1 year plus now, and this just did it. Yeah, definitely. You're welcome. Yes, you have your specific ratio rules versus internet. Yeah, I just went over all my I just went over the ratios and stuff like that for these harmonic patterns. So you can go back and watch the recording. Yeah, definitely watch the recordings so you can get an idea. So that's where I would keep I would normally when I'm trading, I honestly don't trade with a stop loss. Like I keep a mental stop loss. Like I said, you have to be disciplined to be able to do that. Like if you aren't disciplined, then I say go ahead and throw your stop loss around this 1272 level, because this right here, I'm sorry, this right here will tend to happen. I'll show you. What trade was that? Euro CAD, I think it was. Dwayne, you remember what trade that was when price hit the 113 and dropped? I think I got it right here. Hold on. I'm trying to find an example. Matter of fact, while trying to find that example, I just found another trade setup, another harmonic pattern. X to A to B, B to C, C to D. Nice. If you guys don't know what harmonic pattern this is a deep crab. So I'll be keeping my eye on this level right here. This white trend line is my daily trend line also. So you can see price is gonna push down to that daily trend line. And I'm going to have some type of reaction. So I'm looking forward to bounce off that daily trend line with confluence of this harmonic pattern right here. So yeah, looking for that. I actually found a trade setup. So guess what? I'm gonna be patient, wait for it to happen. GPUSD. What was it? What pattern was that on GPUSD? Nah, I don't think you see a cipher here, bro. Show me where you see a cipher. I see one, but show me where you see it. You talking about this right here? Right here? You talking about here? No. Right here? No. Right here? Yes. He says right here, this is a cipher. All right, let's measure it out. So I actually see two ciphers. Let's measure it out and see if you got that right. So again, you got that period of consolidation. Yeah, price came here and consolidated, boom, drop to the downside. Okay. Take my fill from the level of resistance all the way down here to my level of support. And it so far is valid. Gave us that 38.2 touch, push all the way up to the 61.8 without closing above it. So that makes that valid. Now we have our X, we have A, we have our B. So to find our C point, I'm going to take my Fibonacci extension, take it from X to A, X to A, all the way back up to X. And we need a 1272 touch. And it looked like we got that 1272 touch right here. Yep, 1272 touch right there. So everything is lining up. We're good to go. So that's our C leg. It's our C leg. I'm right here, but I'm just gonna throw the C right there. And now we're looking for the completion of that move because we had the 78.6. Take it from X all the way down to C. And we are, let me extend that all the way out. Let me grab and extend it out some more. Yep, 78.6 is right there. So with that being said, grab my tool, take it from X to A to B to C to the completion of D, which is completed right here. Nice. That was a good look. I measured for the high. I measured from the high of on the consolidation. All right, cool. So that's one harmonic pattern. Let me change that color. Let me change it to yellow. That's one harmonic pattern. And the other harmonic pattern, I'm not going to draw it out, but it's right here. X to A to B, B to C, C to D. That's a set. These are the two harmonic patterns. 1, 2, and this big one in white is going to be my third one that I'll be looking for a buy opportunity. So you can see how these patterns, they all like you're in tune with the market whenever you trade it and so forth. So guys, if you all can become great at doing that, picking one pattern and sticking to it, then you're going to be set. But what was I about to do? Dang, and looking at this market again. See another harmonic. X to A to B, B to C, C to D. There's another one. So it's crazy how these harmonic patterns just happen back to back all over the place. My pattern hasn't fully formed yet. What pattern are you looking at? I'm gonna delete this stuff real quick. Delete that. And I'm gonna show y'all one more thing too before I get off. Delete. Oh yeah, I'm gonna find that setup that hit the 113 and drop. I think it was this one, EuroCAD. I'm gonna just use this as an example because I forgot what pair it was that I was actually that actually went up there, smacked the 113 and then dropped. So I'm just gonna use this. So we will have a potential bat pattern right here: X A, B, C, and then no, that's a Gartley, and then price will complete right here at the 78.6 and at 1272 level. Where is it? Let's just take the 78.6. So what price would tend to do from time to time is I would be in a trade right here, sell opportunity based off of this harmonic pattern. Okay. Yeah, I'll be in a sell opportunity based off this harmonic pattern right here. And then if I take my field to identify my stop loss, take my field from from X to A, price would then come up and hit my order right here, the 113 where I have my stop loss, and then it'll drop from that zone. That's why I say I would keep a mental stop loss. Normally, if I see price push up into these zones up here, these are my extension zones, and I will place another order, another sell order out of these zones up here, because this is like the exhaustion. Once price push up into these areas up there, this is like exhaustion, and price will then die down, because a lot of the big boys in the market, they enter the market, boom, buy it up, and these are like the take profit zones right here, where they start to take profit out of these zones, and then the sellers they take. Then the sellers take their part in the market, and next thing you know, it's off to the races. So this is one of those examples where price will come up there, hit your order, hit your stop loss at that 113 level, and then reverse on you. So I would like to keep a mental stop loss whenever I'm trading, for the most part, knowing where my stop loss should be, but at the same time keep a mental note on it. Does anybody got any questions before we actually exit? When will this be posted? It'll be posted in it'll be posted like within the next 30 minutes to an hour. NZD, USD. I'm actually waiting for this right here, this harmonic pattern to complete on NU. I see prices now coming back up into this zone up here. I might start looking for a sell opportunity. I'm not sure, but I was actually on a higher time frame, 4-hour time chart, and I was waiting for this harmonic pattern to complete to the downside right here. Oh snap! Hold on, my bad. Well, let me do this, and I'm gonna show y'all one more thing. I'm gonna go over one more thing, GBP, NZD. So this is the harmonic pattern that I'm looking at right here, X to A, X to A to B, B to C, and it's on a bigger time frame, C to D, complete at the 78.6, right there in that area. So I was hoping news actually shot down, hit my order, and then boom, faked everybody out, and then took off like it did right there. But it didn't. So this pattern will still be valid. I just have to wait for it to actually pull back. But this is also a pattern right here: X to A to B, B to C, C to D. That's also a harmonic pattern too. Happen all the time, right? So I was actually able to catch this sell back in like the first day of February. Catch that opportunity, boom. I was gonna sell it into this right here, but price didn't didn't get down there. So GBP and ZD, we might have a trade set up on this. All right, cool. So what we have is the same as that thing happening on the same as that thing is happening on GBP NZD, X to A to B, B to C, C to D, complete down here in this zone. Right there, bam. So I had this trend line right here. Price broke, came back up and retested. I've been in the sell ever since. And then boom, price finally dropped. So now I'm expecting price to push all the way down here to this level. Once it does, then I'm a buyer. So again, like I said, these patterns happen all the time in the markets. You just gotta train your eye to see it, and then when you see it, have confidence and jump all over it. So again, this is just simple textbook stuff. Like honestly, trend line break. In order for a trend line to be valid, it has to hit 2 or more times. Price broke right here. Guess what it did? Came back up, retested, boom, I'm a seller. Simple stuff. And each one of these different color lines that you see, this yellow line is my my 4 hour my 4 hour. If I change it to a line chart, let me delete this. Show you guys simple support and resistance, like to help you guys out. I have these color coded. The white line that you see up here at the top is my daily. The yellow line is my 4 hour chart. The red line are my 15-minute charts. 15 minute yellow is my 4 hour. I don't have any green on here. I normally have a green on it for the 1 hour, but I don't have it up there. If I go to let me go here to USDJPY. I think I have all my colors on there, and I don't. Ugh. Oh yeah, I do. Bam, there we go. So yeah. So now, right now, I'm looking at USDJPY, and just based off of this, like I say, I got all these color coded. Red is a 15-minute, white is a daily, 15-minute, 15-minute. The green is a 1 hour. The yellow is a 4 hour chart, 4 hour time frame. So right now, I see price is sitting on top of this 4 hour trend line. It broke above it, retested, so I could expect price to push up into this zone. Now I could buy it up into this zone, which would be pretty good. Solid profits. I'll go ahead and take my Fibonacci extension, X to A, all the way back up here to here. You can see that price will be sitting right up here at that 1618 level. Why is this right here? Oh, I know why. It's the pin I drew. So yeah, price is bouncing up into these levels right here. So we could see a potential. Let me turn this back to a candlestick real quick. All right, cool. Yeah, so we could see if price come up here and hit this yellow trend line, I could be looking for a potential buy opportunity. I'm sorry, a potential sell opportunity. But from the looks of it right now, price is currently bouncing off of that, playing around on this area right here, this 4 hour trend line. So I like to mark up all my stuff on a daily, and then mark up my daily points. For you guys to start understanding support resistance, that's something that you guys should do. Go to a line chart and highlight all of the the points, like the peaks that you see in the market. Okay, so you can see I got let's see. So you can see I have all these peaks highlighted. Boom, boom. Just like simple stuff. Okay. I'm gonna do that on tomorrow's training for you guys, so you all can start. Matter of fact, just let me do it right now. Let me go to a different pair. Let's say Euro JPY. I don't know if this is marked up or not. I do have a harmonic here though. Nice. Went for 65 pips. So Euro JPY. I'll go to a daily time chart. And this right here again is gonna help you guys understand how to mark up support resistance. And you can see that I actually do have my daily times charts identified. So I got my daily here. See, price came right back and hit that, you know, price. I can put a daily one right here as well. Yeah, let me do that. Let me put a daily trend line right here on that peak. Let me turn that white. Let me throw one right here. I got one right there. You can see price came down, playing on these levels, broke through it. And you can see how price then respects the market some type of way every time price comes back up and hit these levels. Okay. So now if I go down to a lower time frame, go to a 4-hour time chart, I'll do the same exact thing. But I would zoom, I would go back pretty much as, I don't want to say as far as I can, but I would just go back to a random spot. I would go to a random spot and just, let me see. And I'm gonna just stop right here. And I have these color coded also. So my white is my daily. So yeah, I'm gonna just stop right here. Let me grab a my trend line. And let me change this color to yellow, which is my 4-hour. I see that got this point right here. Well, I got this point right here because this right here happened first. I would throw a trend line right there. I will put one on top up here as well. Put one right here and put one right there. Like I want to be precise when I do it. I don't want to just be throwing random trend lines all over the place. And based off the trend lines that I put back over here, you can see in the future that how the market reacts to it. Price came down, hit, boom, bounced up. Came down, hit out of the zone, bounced up. You can kind of see how the market reacts to it. So I'm gonna get more into detail on this probably tomorrow. Throw a trend line here. And you all kind of get the idea. And then I would go down to a 1-hour chart, go to a 1-hour chart, and I would color code that to green and just do the same thing, marking off all my peaks, all the sharp points I will mark off. And then I will use that right there should help you guys start understanding, you know, support and resistance levels. Is there any potential patterns forming? Are your white trend lines a daily? Nah, it's not the daily highs and lows. It's just me going back into history, just marking up my chart, just doing stuff. You all should be doing this every day. Like just going to your chart and just this has nothing to do with highs and lows at all. It's just marking up support resistance. Like I'm on the hour chart, so I would just come here and grab my trend line, change that green, You can color code this to whatever color you want. Put a trend line right here, and put one right there. Put one right here. You see what happened from based off of this move right here? Based off of this move, look what happened. Price came all the way back down, retested it. Price broke, came back here, retested it, dropped. And these show you the strength of the trend lines as well. Okay, price came into this zone right here, consolidated, boom, before it broke to the upside. So this, like, you can use this right here as well to help you guys understand support resistance, and it'll help you with harmonics. Look at GU. What do you want me to look at on GU? What do you want me to look at? What do you want me to look at on GU? Going once, going twice. Well, I guess I'll see you guys tomorrow on tomorrow's session. I'll drop the recording and not my Telegram, but right here in the chat in about, I'll say about an hour. It should be up. And now I'll say about 30 minutes. It should be up in about 30 minutes because I'll upload it to my YouTube right now, and then I'll drop the link right here so you can come back here and get it. And I'll talk to you all later.